Good morning. Gerald Panneton, Chairman and CEO of Gold Terra Resources, with a project in Yellowknife, Northern Canada, most likely Northwest Territories. And I'm here to continue informing the investors about our progress on the Yellowknife and Campbell shear drilling that we're currently doing.
Gerald, good to see you. Saw you before Christmas, and in fact met you in London before that in November. Exciting times. You've raised some money. You've been putting out some pretty high-grade numbers. You told me they were going to come. I'm interested in seeing how this thing is being planned out for this year. But first, can you just remind perhaps people new to the story of when you came in, there was a big idea, there's a big switch, there was a big change up to allow you to be where you are today. Can you just remind us of what that was?
Well, I think it's about the focus. What was missing, I think, in terms of exploration effort on the Terra X story, to which we changed the name because we changed the focus to Gold Terra, is about high-grade mineralization. The Campbell shear and the Yellowknife camp delivered about 14 million ounces at 15 to 22 gram material, which is more than half an ounce. And in today's gold price environment, it's quite rich. And that focus was missing. So I worked for about 2 years to get the Newmont deal, which was announced in November. And of course, dealing with a major like Newmont takes time, but we have a very good deal, an option to purchase the Con mine. We have 4 years to do so. It's a high-grade target. It's the down plunge and the extension to the south of the Campbell shear that was drilled somewhat, but not the way we would do it. And currently we have 2 rigs turning. We just finished a raise, and this is our main focus.
Okay, but conditions precedent on that deal with Newmont was, yeah, you got 4 years to buy it, but it was you've got to spend $8 million, right? How quickly, you seem in a rush, so how quickly will you actually spend $8 million?
It's never a rush. It's just like when the money is there, you use it and drill it.
Right, so the money's there. Is the money there?
Yeah, the money is there. There's no question, because we started working on the project last year. We did about 13,000 meters. So we know exactly what we're doing, where we're going. We intersected the Campbell shear. We had some very good results. If you look at our January news release of 20 gram over 5.5 meters and 4 grams over 10 meters, or I think 11 meters, these 2 zones on the Yellowknife zone, I think we have a nice deposit now from surface to about 300-400 meters vertical. So it's proving that our hypothesis to go on the Campbell shear side of the Con mine is proving to be real. And because we knew that, we changed the agreement to earn 100% from 60 to 100% and to own it all. And that's exactly what we signed in November with Newmont. So now we're drilling because we have the money. They give us $1.5 million, and we also got approximately $5.6 million on Monday. So we're going to be doing 30,000 meters of drilling in 2022, and maybe more. It's possible.
Okay, so 30,000 meters, that's a lot. Is that all on the Campbell shear, or are you kind of spreading that around a bit?
We have a small target. We wanted to test it, which is very cheap to do in the winter. We use the lake that are frozen to build ice roads. We go to a target and we spend 2 months drilling it. So currently we have 4 rigs turning, 2 of them very short hole, 200 meters, 300 meters, some of them 150 meters, testing a target at surface, which is called MP Ryan, or used to be called Miss Pickle. And this target basically is a high-grade zone. We have a bit of historical width, 3, 5, 6 meters, 10 grams, 12 grams from past drilling in 2017, 2018, but never been drilled under since I joined the company. I wanted to drill it properly and cheaply. You know, before I joined, the cost of drilling was $300 per meters. It was run in a certain way that I think it was not efficient. I said, you go on a target and you put the 2 rigs together and you do a program on the best target, you drill it off, and if you're successful, you go back next year. The cost of drilling in this area is probably $180 per meters from 300. So because we're doing it in the winter and not in the summer with a helicopter, that's the difference.
Okay, so that's just long experience of what works. So that really helps.
It's common sense.
It's just
sense.
It should be common sense. But just let's still with MP Ryan or Ms. Pickle as it was called before. Is there was some drilling that went on there previously. It wasn't just a cost exercise. I want to sort of bring it on to what went on there before, which didn't work, and what information were you able to glean from that, which says, well, actually, maybe it's worth a little bit more spend on a few more meters being drilled there.
When they drill it first, they went during the summer. They use a helicopter, and they didn't have too many places to drill from because they wanted to. So they basically set up the drill and then fan drill like this. It's like you have one set up and then you do a drill hole like this. So they're all about 10, 15 meters apart. So they find about 60,000 ounces in a little pod like this. And so all of that money is spent wrongly because say they do 3,000 meters and they drill within 100 meters. So what we're doing now is drill over 500 meters with a hole every 50 and 100 meters systematically to see if the zone has any potential for extension.
So talk to me a little bit about the money, okay? Because that's interesting with regards to what went on before, and you've clearly stated what you want to try and do this year with the meters which are being drilled on the Campbell shear. You've got the cash. So what do you need to do in terms of those meters? What do you need to prove up? Obviously, you're starting to hit these higher grades now. But
I think it's again is that what is the threshold of what do we need to put the mine in production in today's world? I mean, if it's a low grade deposit, you need a lot because it's all about volume and low grade. But when you have an opportunity to mine or to put a mine in production, and our strategy is extremely simple. First of all, we have numerous targets along an 800 square kilometers property, but we have also the Campbell shear, which is what I worked for 2 years to sign a deal to earn 100% and a purchase option, basically. But there's a liability. It's an old closed mine. But there are some infrastructure left on site that could be very useful for the future. So the combination of exploring, defining for us 2 million ounces is the threshold to be able to take the liability of the past producing mine. By doing so, we will gain a shaft that probably would cost $100 million to sink today. We will get a warehouse, we would get a surface lease, a water treatment plant, all kind of things that in my mind could be valued at $100 million, because I don't have to sink a shaft because it's there. I just have to dewater it.
Right. And so the target is this 2 million ounce number. Okay. So given
we may have more. There's no question with time, but I think the threshold for me, and that's what, and you don't want to be wasting. I've got 4 years. You don't wait for year 4 to do that. You need to know if you have 2 million ounces on year 1, because if you don't have 2 million ounces in year 1, then you have to question your program. You have to question your strategy.
Right, but let's talk about what you're going to put into market, because you're using a lot of data from getting 3 mines into production, and that's what you've done. So you're making calculations that we can't in that sense. So in terms of the information you're going to be able to put into market, you've got 30,000 meters. The bulk of that is going on the Campbell shear. You're seeing grades of between 10 and nearly 20. 10.2 grams per ton, 19.7 grams per ton over decent intervals of 5 and 4 meters and so forth. So you're going to go hard at it this year with 4 rigs. Is that 4 rigs turning all year, or is that?
No, 2 rigs on the Campbell shear already alone. The other 2 rigs that are currently turning will be finished by the end of March, because they're on a winter target.
Gotcha. Okay, right. So you got 4 rigs, and then plus the 2. Okay, so you're looking to kind of accelerate the process to give you the information where you can make a calculation in your head about, could this be a 2 million plus ounce resource? But you won't be putting out a resource this year, will you?
Yeah, for sure. Every year, I think a junior company that is drilling a potential deposit needs to update, because what's the point for me to go and say how many ounces we have if I don't put it out publicly? Look, if you look at, since I joined, we did the first 43-101 in the company's history on the Yellowknife project with something like 750,000 ounces. We drilled a program on Crestoram and Samoto. We put an update resources last year in March, which was about 1.2 million ounces. So we have 1.2 million ounces. I can talk about the 1.2 million ounces we have. And this winter program we're doing on Miss Pickle will increase that 1.2. And on top of that, we gain the Con mine and the Campbell shear, on which I have very confidence to increase ounces. So we'll have an update by the end of this year of the drilling we will have done and an update on the resource. And I plan to do it every year.
Okay, so but are you going to merge those ounces, because they're very different profiles, aren't they? You're talking about some super high grade stuff, and obviously previous stuff wasn't like that. So
well, it's very simple. For me, none of the ounces that we have currently can sustain the start of a mine. However, if I find 2 million ounces at 10 grams on the Campbell shear, and we really think that we have that in front of us, we just have to drill it, we will be able to have the core of a mine that can start. The other deposit will be satellite. We already are conceiving that the mill could be close to Crestoram, for example, where we will have trucking 1,000 ton per day from the Con mine at 10 gram plus, which is very valuable. It's more than $600 US a ton as a value. So you can imagine you putting a truck that has a lot of gold to the mill, and then you start mining Crestoram deposit, and then you produce 200,000 ounces a year. That is a very nice target.
Absolutely. And you've told me in the past, exactly where the mill should be situated, or where a major would want a mill to be situated. So you're planning like that. You're thinking big about it. But what about relations with the town itself? Are you concerned about?
I bet you that the town will be very happy that I don't build a mill in the middle of the town.
Yeah, I know that, but
that's noise.
But all other stuff, in terms of all other considerations with regards to the town and its proximity to the town, has that caused any? Have you had conversations? Or are there concerns by the town?
We've already mentioned our plan to the government and of course during the pandemic, I have not met with the city in person, and it's very hard on Zoom meeting, but the Zoom meeting that I've had with the government official, the different ministers, are very happy that I consider putting the mill outside of town, even if I reactivate the shaft and drive a ramp in town. So it's very good. Okay.
So that's the mill, but in terms of the potential mine itself, that is not a concern.
No, because Yellowknife is a mining town. Yellowknife became Yellowknife because it's a mining town. So there's a mining culture here. And the other thing that is very important is that the diamond mines are on their way out. 10 years from now, the diamond mines might be closing. So Yellowknife is the portal to supply all of the diamond mines of the Northwest Territory via a winter road that goes through Yellowknife. So they know that the clock is ticking.
Right. So your view is that it's a mining town. They understand mining, and with what's coming down the line, jobs, revenue, taxes, all good.
Yeah.
Okay. Right. So let's just kind of lay out the catalyst so people can just easily see what's happening today. Okay. Drilling. You mentioned the sort of two targets. Anything else that's going on that we need to be aware of?
Well, the chopper you hear in the background is not mine.
You're in Miami, right? You're at the BMO conference.
Yeah, I'm at the BMO conference. So because you're along the sea, there's a lot of traffic of helicopter.
Why did they let a $40 million company into the BMO conference? I thought you guys were banned.
I don't know if you can answer this question. Two things, probably because of my history with BMO and the fact that they were present on every financing I did, except maybe the IPO. I've had a very good relationship with BMO, with Detour Gold, which was sold for $5 billion But I started the company, it was worth 140 million. So 140 to 5 billion is not a bad track record. And at the same time, they had made a lot of fee, and it's a trust. I mean, maybe I have a smaller company, but they trust. There's a trust here between myself finding gold and spending the money properly.
So, I mean, I sort of joking there, in the sense that they don't typically let companies under 300 million in unless they think they're going places, right? So that's opened the door to some of the people you already know in the industry. But are you having, or have you had, because it's been going since the weekend, but have you had any interesting conversations, and what sort of people are you talking to, and who's having a look at you?
There was a good, I think I had approximately 20 meetings. The diversification of the BMO conference has changed the profile. There's a lot of company from every sector almost on the periodic table. If you're chemistry, if you remember your chemistry, it's like they're talking about, of course, copper and nickel and lithium and aluminum and steel, about everything. It's a broader conference than it used to be. It's pretty much all the metals, where before there was mainly just copper, gold, silver. So there's been a shift in accordance with what the world is going through in terms of demand. And at the end of the day, the investors, of course, they have a threshold. Companies, management, they're always put the three most important things: the location of your project, the value that you can develop and find, because it's all about creation of value for shareholders, and of course, local community. ESG is very, very important now. And for me, ESG I've done it for many years. So it's not like it's something new for me, because I was involved in building 3 mines. It's listening to your host. I consider myself a guest when I walk into a new town, a new city, when I meet with the Council of Yellowknife, when I meet with the government official. Even if they know me by record, I can say, listen, what can I do for you? How do you want to work that out? I'm not here to impose how we're going to do it. I'm here to listen to how we should do it.
Okay. Yeah, no, I understand that bit, but I'm trying to get the kind of mood, because I can understand why the coppers and the nickels and the lithiums and all the kind of battery metals would be getting a lot of attention right now. Gold's come off the back of a sort of slow, end to the year last year, certainly the last 3-4 months, and it hasn't really picked up at the beginning of this year, despite everyone's expectations. So are the bankers looking to gold, and are they looking to finance gold projects?
Oh, yeah, for sure. There's definitely a demand. What's going to happen is, this money is always about a competition on where should I put the money, right? And some people that I was very big in Detour pre-financial crisis of 2008, 2009, we had Detour was built in the best time of a gold window. I mean, I started the company, gold was $400 an ounce in the summer of 2006 when I was negotiating the purchase. By the time the IPO was done in January, gold was $650. And by 2011, which is only 4 years and a half later, gold was $1,900. Today, we have $1,920. It's a very good price environment. And so gold will always attract, because as you know, worldwide, the grade is going down and the reserves are not replenished themselves. So when Gold Terra are focusing on a high-grade gold deposit, look, Cretium got taken out. Why? Because Cretium is half an ounce, right? Newfound gold one day will be taken out because it's half an ounce to an ounce. Windfall might be taken out as well because it's 10 grams. These are the deposits that you want to develop. They're small. The footprint is environmentally friendly. The big deposits are too big, and they have a bigger footprint. They're more difficult to permit.
It's a really sort of interesting thought. Again, we've got one that we possibly touched upon last time, which is, you're a mine builder. You built 3 mines that got into production. That's hard, right? It's hard. Good learning, but not many people can say it, right? And I just wonder, like the institutional guys, typically they want to invest in strong fundamental stories, which they know are going to get built, because in a good gold environment like we're in, 1950, near down at $2,000 gold, there's a lot of money on the table in that kind of scenario. So that's where they look. Whereas retail perhaps may play a little bit more of a momentum promotional type play. So it just intrigues me is the sorts of conversations you're having and why people are looking at you, a $40 million company today, and as
in Canadian pesos.
Absolutely. Shekels, everything. But it's
30 million US.
It's a certain, the mentality for institutions. They don't want to waste their time on juniors, right? And I'm just intrigued that you kind of get drawn in. Your track record is one thing, but in terms of if there's pushback on the story, is there something else that they're looking for, or do they buy your vision of how this thing gets built out?
I think the drilling always speaks for itself. Okay. I have a target of 2 million ounces. I will have a resource update at the end of the year. Will I be at 2 million ounces or short or over? Time will tell. Drilling will tell. And then we can reassess. But I think if I do deliver 2 million ounces, listen, when I look at Detour Lake in April 2006 for the first time, I said there's more than 5 million ounces potential there. I did that in one afternoon. In Yellowknife, there's more than 5 million ounces potential. There's no question. I have one of the best property to drill the Campbell shear, and we control 800 square kilometers. We will get 5 million ounces in our book one day. How fast can I do this? The fastest I can move with the money I have.